Hello. I hope everybody's having an awesome weekend. This is 50 pips rocking and rolling here, 14th of December 2014. Not making any trade calls or recommendations. The fact you're in here means you've read, you understand, you accept all the disclaimers here on the website and everywhere else. Understand that we're just performing some live technical analysis in a learning context for educational purposes only, guys. So what's happening? So we had interesting week here, and it looks like we're going to have another one shaping up. Now keep in mind that we've got a fairly slowish Monday. I mean, we do have some Australian data in the overnight session, but some medium-sized data out, but not a lot of event risk. So we'll have to see. Basically, it's going to be all about how the market is going to respond following Friday's action, right? And keep in mind that as we go towards the end of the year, as we go further on in December trade, it's going to be interesting to see more positioning and squaring into year end. Also keep in mind that this Friday's triple witching. So basically Tuesday is going to start to shape up as the most is the first really interesting day, because we've got the Australian monetary policy meetings, we got all the PMIs, right, starting with the China PMIs. Then as we go throughout the day, apart from having the bank stress tests out of the UK, we also have all those European PMIs. We've got Carney on the wires, we got CPI out of the UK, we have the German ZEW, we have home sales out of manufacturing sales out of Canada, we have building permits out of the US, and we have those GDT price index, basically the dairy price stuff out of New Zealand, which has definitely been a mover recently. The past 2-3 releases have seen Kiwi move about 60 to 80 pips, so clearly something to keep an eye out for. Then Wednesday's the main day, right? We got all that claimage count, the MPC votes out of the UK, we got the CPIs out of the US, but basically the big event risk is going to be the FOMC. Now keep in mind that there's an FOMC statement, so we got that rate decision, and then we have a press conference. So that's really going to be interesting, and a little cherry on top of the cake on Wednesday is going to be the GDP out of New Zealand, right? Then for those who think they can go away, well, not really, because the week's far from being over, because we got retail sales out of the UK, we got unemployment claims out of the US with Philly Fed. We still have a lot of stuff coming out, especially for Thursday. The focus is going to be the German IFO release, and then on Friday we've got basically the BOJ on the wires with policy statement, and then we have some other data out of the US and Canada. So clearly it's a very interesting week now, so we'll have to see how the market behaves. Now I think the other thing, keep in mind, just one thing I was talking about on Twitter that a lot of people asked me about is people keep on writing, asking me about Euro CHF. Again, I don't have anything constructive to add on Euro CHF, except that if you want to buy a lottery ticket, you can, but it's not a way to consistently manage your trading career, right? You can't really build a trading career out of those trades. The other thing is, keep in mind that it's not because they have a floor that has to be respected to the pip. It's not that if stops get hit, we can't print 100, 200, 300 pips lower. And also keep in mind that as we go, a lot of people who will be trying to trade this to the upside, who will be trying to hold the lottery ticket, whatever you want to call it. But as we start to go towards the thinner liquidity and the holiday chop, the big question is how many people are going to really, apart from the, a lot of small retail players, but, how many people are really going to want to hold big positions open throughout, December, Christmas, and the New Year's, when there's going to be very thin markets, and you could see a lot of wheeling and dealing, right? Because you could leave that on and think you're coming back to a Christmas present and think I'm safe because I've got to stop, but just keep in mind, stop order becomes a market order when it gets hit, right? So, if there's nothing there, you can get filled 200 pips below. So again, I don't think it's something constructive to talk about. There's some new people listening to these, so I don't want to be one of those guys who's trying to sell the dream of these trades, or I just don't want people to get feeling that there's a lot of edge with these trades. So that's why I'm not talking about it, but I really don't think there's a lot of edge. So what else is going on now? The focus is really what's going to happen on the ES. Now we kept on talking last week in the last Sunday review. We said as long as we don't get a big change out of the FOMC, this will probably try to grind higher. But we saw that there's a lot of air pockets, right? There's a lot of air pockets in the market. And as we said last Sunday, keep an eye on what happens around those 2075s. And going into the week, I'm going to be looking at tactical opportunities to sell. rather than to buy is just because the odds at those levels, you know, even if there's going to be a healthy retracement, are so much bigger to the downside than to the upside, right? So we got some very nice moves on the ES. You know, pretty pure action here. Move back down. Then the other thing we said, you know, apart from that action around the 2050s we talked about on Twitter while it was happening, is again, if you've been buying the dip for the past year and you got lucky, you know, don't, you know, there comes a point where you've got diminishing return. You know, there comes a point, don't be greedy, getting really aggressive. Even though you've made money, you don't want to be the guy or the girl getting really aggressive trying to buy 2050s, 2060s, 2040s, 2030s, right? Because those last pips or those last points you're trying to catch could end up being the most expensive ones. And there's nothing worse than somebody who's been trading well, lucky or not, whatever, somebody who has a good PLL, and you go away and you throw it away at the end of the year. So just be cautious, okay? Right here, the way this is trading, we're looking at those the 2000 level to be pivotal going into the week. Again, if we cannot get back above that 2000 early, you know, I would expect to see more downside. The way this is trading, again, not a surprise Friday. You know, after you see those move, who wants to really go long over the weekend? Now, you know, we have a triple witching week, so we could get some wheeling and dealing here, but so far it looks like everything's pointing to the fact that we could easily get a much bigger correction here, right? So don't be surprised to see us coming back all the way down into those 1950s even. That's where that 200's coming in. Here we've got the 100 moving average and the 200 moving average. So clearly that whole 50 back zone of that move from those lows, you've got a couple of dip levels here, is probably what is going to be attracting, unless market can get a bid very early in the week and hold above. Then of course, keep in mind we've got that huge event risk of the FOMC, so I think everybody's going to be waiting for that. So keep in mind that if we hold heavy, there might be a lot of people who are probably not too eager to jump in and buy this pre the FOMC. They're going to be waiting for action on Monday, but keep in mind that's going to be what I'm focusing on. So as this is widening out, you know, pretty much what I'm looking at is that 2075 now is really that top. The 2000 is going to be the pivotal level. You know, on any move up, we're going to have those 2050s that are going to be resistance. But now to the downside, I'm looking for this whole area and seeing how we see action around that going into the week. Okay, so in terms of other futures, I mean, crude, I don't think there's a lot of edge. Again, I don't want to start getting people in trouble on crude. We kept on saying, we've been saying this for weeks. If we start to get a little bounce, we expected it to come inside that 80 to 70 zone, right? That's where we're looking for some kind of a bounce. And especially on commodities, it's not the kind of chart you want to go in and catch a falling knife. You're much better off missing the start of the move, but waiting to see some kind of bounce and then go in. And what we said is, if nothing's coming in, you can't see any bids coming out, there is no edge trying to catch this. Most likely this is going to go a lot lower, right? So right now, you know, we're trading below those 60s. You know, take your pick, you know, 60, 55, 50s. And you know, I'm not eager to catch this. Again, if you're asking me where do I think crude's going to be trading 1 year from now, you know, do I think we're most likely to see another $30 to the downside or $30 to the upside? You know, definitely I'd have to say $30 to the upside rather than downside. So I think there's going to be an interesting play here. Now it depends if you're trying to trade it tactically intraday or if you're trying to build a swing long. But again, anything under 60 into those 40s, I think if you're looking for, you know, bigger, longer term positions, clearly, you know, the most people are going to be looking to build some kind of a long exposure. Gold, focus on gold here as we're hovering around. Sellers trying to cap this. We've got that 100 and the 200 moving averages on the daily. Now, you know, as long as the shorts can cap it below that 1250, then you know, most likely we'll see a lot of choppy trade through the end of the year into this 1250 and 2000. You know, pretty much as long as ES stays around those highs and that 50 back we just looked at, you know, we'd expect price to stay roughly pretty much trading in this kind of area. But if the ES should start to take a much bigger turn for the worse, and we see gold trading back above the 1250, then that 1300 is going to be attracting. That's pretty much the risk range I see going into, you know, these this week and the next. So that's what I'd be looking at. In terms of Aussie and Kiwi, again, a lot of wheeling and dealing. It looks like Kiwi's trying to base here. We've got a lot of pivotal action. It looks like this descending trend line is still acting as resistance. So that's what I would be looking at going into the week, right? The shorts will have to be defending those lows, and then we've got that high range. So a lot of the way I look at it is a lot of choppy action. Maybe, you know, that dairy auction is going to be either kill it or or make it pop. But I think there's a lot of chop inside those 80-30s and those 76.00s, and we'll have to see how this resolves. As long as this descending trend line can keep pressure on, we might continue to see test of lows. But again, I wouldn't get carried away to the downside unless you see daily closes back below those 76.00. That's probably what's getting protected. So I'd look at that as base resistance, and for this to be sideways chop to attempting pops to the upside unless we get a daily close below there, right? On a daily basis throughout the week, you know, any day we start to get a close back above this trend line, then expect this to potentially move aggressively back into those 80s, right? That's what I'm focusing on. And, you know, similar kind of case here, sorry, on Aussie, as it looks like it's trying to bounce. Clearly it's looking very, very heavy. And it's just very, very choppy, right? So even though we've seen some kind of dollar weakness coming in on euro and cable, which we'll look at in a second, you know, these are going to have a lot of trouble bouncing, you know, unless something changes in terms of the China story, or unless crude tries to catch a bid, right? It's the same thing with CAD. So as you know, crude's really going to weigh on these commodity currencies. But look at us, basically look at these two levels here up on the chart. Very similar discussion to what we looked at on Kiwi. Okay, so let's look at cable. We're right back into that choppy zone, right? And we talked about this whole level on the weekly, right? Basically 55.80s and 57.20s, and saying as long as it's inside here, this could move very, very quickly. But don't get confused with velocity of move inside range. Now, we've also been talking about, you know, for people who like to talk about fundamentals, etc., you know, we still expect BOE to be, for, you know, in the big scheme of things, or at least versus euro, to probably raise rates higher. So again, we expect this to hold a bid. So that also means a euro GPB to the downside structurally in the long term. But right here, it looks like we're trying to break outside these ranges, right? We've tried to the downside, we couldn't break above, and right now it's pressing those 57.20s, right? And we keep on talking about those 57.20s. We keep on talking about that level. And if we start to close back above, then we would expect this to make a run all the way back into, for starters, 59.50, 60s, potentially all the way into those 63s. Now, keep in mind that back on this weekly, we're going to have those two moving averages coming in right in those 59.50, 60. So that's going to be a massive zone. Very, very important point. But, you know, these reversals, which we've seen, are very clear on euro and on cable. It's the same thing here. If you look at the daily, right, we're pressing back down, and then we try to press lower. Failure to break below after those ranges on the ECB, the NFP, and basically daily reversal, and then we start to reverse back up, right, around these 57.50s. And very nice little trades there. Even if you look at it on the 4-hour, right, you get that break below this 4-hour, takes out some weak longs, bam, reverses back up, and we start the move back up all the way into that pivotal level, which are those 57.20s. So again, keep on focusing on those 57.20s, see how action behaves here, but especially going early in the week, if we can get traction above those 57.20s, then I'd expect to see more correction to the upside. Okay. What's going on euro? Well, euro, again, very similar story to cable. So you remember we talked about the the moving average, right? We were talking about this all the way down, saying everybody and their hamster is looking at this 200 moving average on the monthly. Everybody's looking at it. We have to go. We have to touch it. We're going to break it. Euro's going to go to parity, etc., etc. You know, the usual doomsday kind of crowd. And what we say, you know, you just have to respect these touches. So if anything, you know, if you're looking to do anything, at least the way we trade, the way we look at the market, if you believe in cyclical markets and reversal to the means, etc., etc., and healthy markets, the only thing we can do is look to buy and move into that level. Definitely not be the last one at the party when there's no punch left, when the punch bowl is empty. We're definitely not going to get short into a brick wall, right? So if anything, it's, you know, you're looking to get long into those levels, not short. So right here, that's levels holding very, very nicely. So on the monthly, a lot of people are going to be looking, well, you know, also are we going to see the classical kind of seasonality trends, December being decent month for euro, and we're going to see this close positive, and then that means, bam, it's time for a healthy reversal. You know, even if it means then get sold off to crumble or whatever, but right here, you know, into a brick wall, nice roll support, it looks like it's going to try and get a healthy bounce, you know, and everything's pointing to that. You know, even if you look at it back on the so that was the monthly. If you look at the weekly, we press lower and you know, not being able to get any traction, it's moving right back, hugging that 125, right? So that 125 mark, we've been talking about that for a long time. That's the pivotal level going into the week, right? So we see that 125 mark on euro, exactly the same as that 157.20s on cable. That's the bull bear line going into the week. So cable, as long as we get daily closes this week below 57.20, heavy. If we get daily closes back above the 57.20, bid, right? And it's going to be the same thing on euro. As long as we hold below the 125 mark, expect this to continue to trade heavy. Once we move back above the 125 mark, especially from a weekly perspective, that opens the doors up for a potential move back into the 127.80s, even the 130s, right? Even 132s. We'll have to see how that trades. But even, you know, exactly like we said on that cable, very, very pure reversals on euro. This is the other chart we've been posting on the blog, right? We move back down into that 123. We take out all the weak longs of the round number, all the people trying to play the round number play. We take out the weak longs and bam, beautiful little reversal on the daily, moving right back into the 125. If you look at it on the 4-hour, even purer trade, you know, even tighter stop, bam, press new lows, reverse back there and start to get, you know, a bit of front run of that daily close. But again, very nice action. So keep in mind that those are the levels we're watching. Again, a lot of people will be looking to sell euro on this whole range. So as long as it holds below, you know, expect all these moves back into those 26s to find sellers trying to smack it back down below the 125 quickly, because that's the pivotal level. But we start to hold above, then most likely it's a healthy little retracement to the upside, okay? So that's pretty much what we're looking at. Keep in mind, there's a lot of event risk this week, right? Both on euro, we got that IFO, we got ZEW, we've got FOMC, we've got a press conference, we've got Carney on the wires, we've got that dairy auction out of New Zealand. We got a lot of stuff. We got a BOJ on the wires on Friday. So keep in mind, there's going to be a lot of event risk. And again, as we're going towards the end of the year, you don't want, you know, you want to start to be a bit more conservative. You don't want to ruin your performance at the end of the year, or you don't want to end the year on a bad note. So you want to try and end on the year on a good note, trading responsibly, maybe a bit conservatively, but try to end on a good note. So both, you know, hopefully financially, but especially also mentally and trading wise, you can go into the next year being zen and in a condition to really try and perform at the best of your potential. Okay, hope you enjoy the video. As always, guys, have an awesome rest of the weekend wherever you may be, whatever you may be doing, and catch you guys for London Open. Take care. Bye bye, guys.